How are we doing, guys? Welcome to the psychology lecture, which is going to probably be one of the most difficult actually, no, it will be the most difficult aspect of your trading because you're always going to be battling your psychology. We've been trading for years, yet we'll still make some well, not going to say mistakes, yet we'll still have battle ourselves in some aspects on a daily basis, but we put things in place to prevent those from happening. Yet you always find yourself testing your inner self essentially, and testing who you really are when you do trade these markets, because it can be a very difficult job. Well, it is a very difficult job, and I truly believe that if you don't practice your psychology, but practice how you approach the markets and reflect upon how you approach the markets, you will really struggle in this game. So what I want to talk about is just kind of give you some, not examples, but just go through some things that I want you to know from the start of your trading journey, implement from the start of your trading journey, because they are going to be very, very important. And the quicker you do these, the easier it will be for you moving forward. But you will still face battling these problems all the time. So the first thing I want to talk about is actually in one of the videos we have talked about, I think it's a journal video, we talked about the sin tally in your trading journal, which you should really be utilizing, because that's going to be your first indicator of what your mistakes are. So whether you're always entering trades too late, whether you exit them too early because of in fear of giving back that money. So we from that, we're able to analyze how we approach the markets yourself, and how we can actually stop these things from happening. So just eliminate those things from the sin tally, because if they keep happening over and over again, you have a deep-rooted issue which sometimes may not be solved, or sometimes you just won't be able to get rid of it or actually adapt to it, because you can't get rid of personality traits. You can only adapt your personality traits to suit the market. So you'll have to recognize what things will hinder your progress in trading and actually work around them. Well, that's something we'll be able to do with you. So as I said, the first thing is know where the sin tally is in that trading journal, and fill out the sin tally. Recognize if your trade goes to stop, remember, it's never the market's fault. Whatever happens, it's always your fault. Every time it will be your fault, because the market does what it wants. You can't say, oh, the market went in the wrong direction. There's no wrong direction for the market. There's only wrong direction of your trade, because you went against the market and you lost money. So you need to first of all recognize and be accountable for yourself when the trade does go against you. And if you do recognize your own mistakes, that's the first step forward, I think. And that's actually a massive step to consider, because there's people to this day who use signal services just as an example, and they're still not accountable for their own trading. And we've been banging on about accountability throughout all of this, throughout all of the course. So it is really important you're accountable for your own trades, and you do identify what you are doing wrong, because that's going to be a massive step forward to start you off. And then what I talked about actually in implementing market structure is having your own daily checklist and sticking to that checklist every day. Because if you identify levels, or you identify areas of business which you want to trade coming into the day, and the trading day goes on and you don't actually trade these levels because you think, oh no, there was news coming out in one currency and I thought it's going to affect, there was news coming out, let's say for the euro, and I thought it's going to affect my pound dollar currency pair for some reason, and so I didn't trade this. Or no, the price action was coming, as I've got an example here, price action was coming too violently into my area of business. I didn't want to trade this, as I thought it indicated momentum to the other side. Things like this, that will be another thing which you'll be able to pick up instantly. If you go for a week or 2 weeks and you're making the same mistake 2 or 3 times, you can pick that up quickly when you do actually go through your journal and analyze your trade results as well as how you felt at the time, because it's always important to know how you're feeling. As honestly, the psychology part of trading is about 70%, and the actual technique and how you trade and your trading strategy is about 30%. Richard Dennis was a famous trader back in the 80s and the 90s, I believe, and he actually said in an interview he could publish his trading strategy on the first page of the Wall Street Journal, yet not many people if any people would make any money from it, simply because everyone else is different. You have to recognize your mental edge above anything else. Like, you hear people always say on Instagram, there's an edge in the market, exploit your edge in the market, exploit this edge, use the fib, use this, use that. But what they don't recognize is you are the edge in the market. That's why we didn't introduce you to this strategy straight away. That's why we want you to understand market structure and recognize how the market is moving above anything else, because then you realize you can adapt yourself to that market, and you can adapt yourself to look for different trades rather than just sticking to that one strategy. Identify that you are the edge in the market, and whatever you do will impact yourself more than anything, more than any strategy. That's why you can go through different strategies, but you're only going to glue with the one that is suited most to you and most to your personality. So just be aware of that. Another thing I want to talk about is actually another quote from Dante, and the actual thing he says is, you should have expectations of what the market should be doing every day. As I said, when you come into a day and you mark out your areas of business or your levels you want to trade off from, have expectations of, obviously, if you want to go short, if say I want to go short from this level up here, my expectations is I'm going to have shorts coming today. So you do have expectations in the market, but then what happens if the market just decides to trade through this level? So in that situations, if you expect the market should be doing something and then you find out it's not doing what you think you should be doing, then you're reading the market wrong. You are reading the market wrong. You don't go out there and you chase that trade, because the market can go up and up and up and up, and you won't have any clue why it's doing that in that situation. In a few days' time, in a few hours' time, you might find out, maybe there was some news release I wasn't aware of. But at that time, the market's not doing what you think it should be doing. Therefore, you're not reading it right. Therefore, you should not enter that position into the market. It's as simple as that. Yet so many people fail to comply with some of these very simple rules because they're always chasing the market, always chasing the trade. The biggest thing people suffer from is actually over trading. Let's say they want to short the market here. They have one short position there, they'll have another short position there, then they'll have another short position there, and finally they'll have a short position here, and then they'll make profit on that one position, but they would have lost. Let's say they make 2 on that last position, but they lost 6 beforehand because they're always chasing the market. That's why you might see them post, I've just got 10 on this trade. Yeah, but how many trades have you lost chasing that 10 You're never going to know, because no one's ever going to post their losses, because people don't want you to see that they lose. Everyone is perfect online. Everyone's always going to be the best trader on social media, whatever, which is just not true. So stick to what you know, and remember, if the market is not doing what you think you should be doing, then you're not reading it right. It's as simple as that. It leads me on to actually revenge trading, because if you're wrong on the trade and you try to get one back on the market will always remain irrational longer than you can remain solvent. It's as simple as that. I've heard of traders who had 5 billion to 10 billion positions on, yet they were always chasing the market. They were waiting for that market to turn. And when they actually had to eliminate the position, they got a margin call from the broker and they lost billions of dollars. Guess when the market turned? It turned as soon as they hit their stop, because the market is always going to find your breaking points. Always look for your breaking points. So just be aware of that. That's why we do have these stops in place, because if you're stopped out, when I'm stopped out, we place our stops in areas where we're wrong on the trade. So in this example here, I'm going to talk about it in a minute actually. I enter the market there, my stop is there. Why is it there? Because that's where I'm wrong on the trade. If the market breaks above here, it's formed a new higher high, the pattern is invalid, I'm wrong. As soon as I'm wrong, I'm out of the position, I'm out of the trade. It is done for me then. I'm not going back and trading the market again, because now I've read the market wrong. I'm out of the position. That's me done for, whether it's for the day, whatever my rules permit me to be done for a specific period of time. That's it. I'm not going to try and get one back at the market, because that's not the way it works. That's not how you're going to be profitable in this game. And when we are talking about these psychology rules and these psychology basics, we always talk about longevity. That's the ultimate aim in this game. Longevity is the ultimate aim. You don't want to be making quick profits somewhere, massive runs. Where you want to be in this game for the long term, and you want to continue to improve and improve and improve. Another thing is actually, I think I've talked about this before, is don't think about what the market's going to do. You have absolutely no control over that. Think about what you're going to do when the market gets there. That's why chasing trades is just so silly, because you don't know when the market's going to turn. Yet, if you have predetermined areas of where you think the market's going to turn, you can anticipate these. And then when the market gets into that area, you know how the market's likely to react based on your previous results, based on what you've back tested, based on your live results, based on what you've forward tested. You've got data to back up these areas, how the market has reacted there before. So you know the chances of the market doing that same thing, because the market does do the same thing essentially. Why does it do that? It does that because people rule the market. The market is based on people, and the quicker you realize that, the easier it's going to be. People say, oh, there are no similar behaviors, but they obviously haven't observed the market long enough. Most of the people give up because they are not patient enough. People think in days, months, but they actually progress in years. Every moment in life and in the market is unique, but there are similar behaviors which repeats themselves over time, because markets are run by humans, and humans have habits. Like, people develop habits and they will continue doing the same thing. That's why there's strategies from 10, 15 years ago that still work today, and they're very powerful today. Why? Because people don't change. Like, human behavior rarely changes when people build habits. So just remember that the market is a reflection of people's fears and people's aim to make money in the markets. Everyone wants to make money, no one wants to lose money. That's why you have to think, where can I trade to really make someone else's money? Because that's what you're going to do. You're going to be taking money from someone else. If you're winning a trade, someone else is losing that trade. If you're not practicing, somebody else is, and he's going to come in and take your money. But following that, I've actually got a nice quote which I'm going to talk about in line with this trade here. From, I believe it's from Trade Like a Casino, which is a very good book. It talks about how you develop your mental edge and you actually develop that longevity, because people can come into the casino and win big. They'll win very, very big, but the chances of that happening are not very big. The casino works on probabilities. That's why it manages to make money in the long run, and that's what it should be aiming for. So let's say, so this is the trade I actually took on the 16th of July. And you might be thinking, oh, you really took this trade. You stood in front of this over 60 pip rally. Yes, I did, because I identified my areas of business. I knew I wanted to stand in front of that trade. And to many of you, this might feel like a stupid thing to do, because we got all these highs in the market here. The market's clearly broke above the high of the day. So the market is obviously in a rally. The market is obviously in a rally, and we're going to see it just continue to trade upwards there. Yeah, I've stood in front of the markets. Why did I do that? So we are all human beings experiencing greed and fear at the same moment. It feels easy for us. If it feels easy for us, it feels easy for everyone else, and is almost guaranteed to be a losing proposition. But then if by contrast, it feels impossible for us, then few others can take that trade. And by doing, which is what is psychologically uncomfortable, by taking this difficult trade here, you make the money being lost by the other 90% of all speculators. Because 90% of people, 90% of retail traders that trade in these markets lose money, and they lose money consistently. What you want to be doing is you want to be trading like the other 10%, and the other 10% will not trade all these easy trades that are just align themselves perfectly. The other 10% are going to be trading trades which are scary, and they're scared to stand in front of. I was scared in standing in front of this big move, because nevertheless, it was a big move. I only had a 13 and a half tick stop, and I was scared standing in front of this move. But from my experience and what I've actually gathered, the stats I I wasn't hoping that the market is going to turn here. I knew there was a percentage that the market was going to turn here. That's why I was able to implement that percentage, and knew, okay, there's a certain amount of percent that the market is going to turn in this area, and I'm going to use that to my advantage. If it doesn't, I may get stopped out. I've been stopped out with 5 seconds in the past and lost about 3,000 like this. It happens. Sometimes it does happen, but then the times it doesn't happen, you are standing there in front of a massive move in the market and you are really comfortable. But if you're uncomfortable, think how everyone else is feeling. Everyone else is going to be as uncomfortable or even more uncomfortable than you are. And if you can't sit there and wait for the market to come into your area and you pull your orders, watch how many times a trade will actually go on to be a winner. Because there will be times where you will be pulling orders when the market's absolutely come into an area like this, or it's just fall into an area like a knife, and you're just standing there in front of it waiting for the market to plummet like that. So my point is, you will be scared, but learn to live with it, learn to embrace it, because like, I'm not a spiritual person, but I think Will Smith once said, God put the best things in life on the opposite side of fear. And if that's not true for trading the markets, I don't know what is, because you will find that it happens all the time. The best trades will be the trades that you are there sitting, you are there thinking this is going straight to my stop, and you will realize this the more you trade. So really do think, okay, if I know this is a good position, I know if I'm really excited for this trade because the market is just aligned itself perfectly, most likely many other people are going to be thinking the same thing. So be aware of that. Be aware of when they're likely to enter the market, because not many people would have traded this back to its sense of original move, because you might be thinking, oh, the market's made a new high. It's obviously not going to come back here within 3 hours. That's just not going to happen. And when you do say it, so let's say the market's actually trading around here and I've got my entry around here, and some people would say to me, oh, the market is not going to move 60 pips within half an hour. That doesn't happen. And when they say that, the market will literally do that. As silly as it sounds, I'm not saying I'm a prophet or anything, but when you think the market is not going to move into an area where you think it's going to move, it will get there. Like, the market is its own thing. The market is curious. The market will do what it wants to do. It's a living beast. If it wants to get to an area, it will get to that area. So just be aware of that. Be aware of, like, as we always say, the 90% of people, they don't want to be doing what the 90% of these retail traders are doing. A few more things I wanted to talk about is how you can't be attached to money in this game. Like, something I talked about, the quote, well, it's not quite, I actually thought of this myself when I talked about LeBron James doesn't get paid the most because he's thinking about his paycheck. He gets paid the most because he's thinking, because he's the best athlete that he can be. He's working towards being the best possible NBA player that he can be. Like, he doesn't focus on his paycheck, he focuses on his performance. That's exactly what he should be doing. The more you focus on the money, and it might sound silly, but the people that do actually start trading because they believe they're going to make the most money and are attracted to these sick cars and attracted to these houses, whatever, they're the ones that don't actually make into this game, because they're always living in fear of losing of what they've made, so they never take the risk to actually achieve that success. That's something you should be aware of. I don't ever look at my P&L. I will look at my charts and my charts only. I don't need to manage it. I'll go into my entry for my C trader when I need to adjust my stops, or I need to trial my stops, and I'll have a glance and I'll see, but it doesn't bother me that much, because I'm not thinking about their money. I'm thinking about, how can I get the most out of this market? How can I get the most out of this trade? Because at the end of the day, that's what's going to keep you in this game. The more you focus on the money, the less you are going to make it, which doesn't make sense that now, but you will realize this as you go forward, because you're just going to live in fear of giving it all back. Like, this is a perfect example. Let's say you've only made a few hundred this month and you don't want to give that back, so you pull the order. And then if you pull the order because you think, oh, I made £400 this month, it's okay, I don't need to make any more now. And the market comes in, goes down, and you've made another £300, let's say. You're gonna like pulling orders and missing moves like this. Sometimes can be worse than actually losing money yourself, because you had that order in the market, yet because you were scared, and that's the reason you pulled your order. You were scared, like, about what the market is going to do, because you weren't confident. in your trading strategy and confident in the results you backed and the statistics you had. That's why you pulled your order in the market. And when the trade goes to your target, that's where you're going to feel the most regret. Sometimes it's not when you take that stop, sometimes it's when you do miss this trade. So that's why we bang on about you utilizing your journal, get those statistics so you're not living on hope. You're like, you want to eliminate as much hope out of your trading as possible. So I'm going to bring in actually a trade idea. Let me just find it here. This is a trade. Oh, zoom in. Trade from February 24th. We had a trade on euro dollar. That's actually an OTE trade. Trading from this, like, I don't know if I went through on the OTE. Yeah. Anyway, why I want to go through this trade, because you might think, oh, the price action just kind of grind into this area and close past the 79 fib, so close to your stop. Why didn't you get out? The reason I didn't get out is because the trade idea is still valid. If your trade idea is still valid, there's no reason for you to get out. You have that stop loss in there for a reason. Obviously, you don't want price action. You don't want to be taken out at your stop all the time, every single time. But at the beginning, you might find you are, but that's something we'll be able to work on when you utilize your journal. If you are getting stopped out all the time and you are taking those 1 or 2 hour hits all the time, that's something we'll be able to look into, or you will actually find out yourself. And you have this predetermined area. So you might say, oh, if the market closed through 79 fib, that's where I'm going to exit the trade, because I've found when it closes through here, chances are it's actually going to go and take out my stop as well. But if it doesn't do that, then you stick with your stop loss. If you don't exit the trade if the trade idea is still valid, because you're scared of giving that money back. If you are looking at your MT4 and you see, oh, the market's halfway over to my stop loss, I'm down £1,200 on my account, and I don't want to take that 2,000 or 2% hit, you're just scared. You're not trading the market, you're trading your P&L. And I'm not going to say I was comfortable, because I'm not comfortable sitting in stop, but I knew I've been in that situation before where even a close within the 79 fib, I wasn't going to exit my order, because I have enough backed up results to satisfy me enough that 70, 80, 90% of the time this trade will go to target. And as soon as it came up here, it rejected this pool of liquidity again and just absolutely fell off the cliff and went straight to my take profit. And if I pulled that order at that time, I would have shot myself in the head missing a move like that, because it's a beautiful move. Yet, like, the momentum price action came in here didn't mean anything to me. Like, the higher, the faster, the bigger the momentum as such trades like this, the more comfortable I'm going to be sitting in those positions and sitting in front of those big moves in the market. Because I know the bigger the moves like this, the liquidity is drying up. And when it reaches this point here, there's just the price and efficiency. And as quick as it rises from this level, sometimes as quick as it will actually fall. That's something you are going to develop over time. So don't be scared of exiting trades as well when they are running stop, because they will be running stop. What should you do? You need to build up a portfolio of your backed up trades and backed up statistics, which you can rely on. And then the final thing I want to actually bring into here is something we should all actually look at. 2 seconds, and just change this. You can all see it. Oh no, one page. Yeah. Not just zoom in a bit more. Come on. There we go. So something you should consider, and I'll leave this checklist on the Atlas Blueprint section of the website. So if you have a trading decision, so you don't take a setup, although it matches your trading criteria. Why have you not done this? So the emotion you're feeling is fear. And how should you combat this? You use a physical checklist. So let's say you do find that you miss trading setups because they match your criteria perfectly, but you are scared of taking a trade for whatever reason. Use a physical checklist, have specific points written down. So has the Asian range been, as the London session took liquidity from the Asian session? Yes, that's a tick. If you go all the way down your checklist and you tick all these boxes, you eliminate that emotion, and you're much more comfortable trading. Like as I said, you can't change your personality traits, but you can adapt them to trade, because many people will have to adapt themselves to trade these markets, as it will be difficult. So another reason, so you take profits too early without actually having any clear reasons. That's probably one of the biggest things you're going to have to get over, because as humans, and there's actually been an experiment done about this by Daniel Kahneman and Amos Tversky, I think, in 1979. It's a very famous experiment. People will be hopeful when they lose money, but then they want to be certain when they make money. So if your trade is slowing in, stop. And most likely when you start, it will be. It's just the way things go. You won't want to close that trade early, so you don't want to close it for like 0.1%. You'd rather wait for that trade to hit your stop, because you'll be hopeful that the trade will actually turn itself. And it's just unnatural. It's just nature, basically. It's how we've evolved. We are always hopeful on our losses. Yet when it comes to your profits, you want to be certain in profits. So when you see, oh, I've made £100, well, I'm like, my take profit is far further from that. So I could potentially make £500. Yeah, no, this £100 is safe. I'm not going to have this £100. That is the killer. That is what's going to kill you in this game, and you have to adjust yourself to actually do the opposite, which is going to be the hardest thing for you to do, and was the hardest thing for me to do, and for everyone else I know. So when you are a trader, you have to be hopeful on your profits and cut your losers early, because that's going to be the most detrimental thing to your trading, period. You're going to have to cut your losers early and let your profits run to actually get those. But that's going to be one of the hardest things, but that's going to be one of the biggest things, which is going to make you like very profitable if you do exercise it properly. And the tip here is actually close your chart after you've entered, which can also be good if you are trading. That's why it might hold well for you if you don't trade full time and you have that time when you actually are at work, because you can enter a trade and not look at it, which can actually be a big thing. Because if you're in front of your charts all day, you can be your own biggest enemy, where you cut your winners early. But if you don't look at the charts, the price action will go where it tends to go without you interrupting it. Because sitting on your hands, believe it or not, is probably one of the biggest skills as traders. Sometimes we can sit on our hands for days at a time, not taking a position, because we know where we want like the market to go for us to trade, and that's what you're gonna have to do as well. Winding stop losses, not cutting your trade when your strategy tells you to. Once again, you are fearful when you're hopeful. What I said before, the best tip is don't watch your P&L. Not being aware of important news or releases, that's just lack of focus. And if you're not aware, I will personally be angry with you through how we have covered fundamentals in this course. You need to check the news calendar every day before your trading day. That's why in the trading, what's it called? What was I saying? In the trading routine plan I actually made, there is a section fundamentals which you should be filling in before every day. You need to know the high impact fundamentals, which are likely to affect any trading positions. So you press buy instead of sell, type in the wrong trade size. It's happened to us, it's happened to everything, but you need to be focused. And once again, yeah, you may have a trade checklist which you approach, and you are clear about your approach, but you just need to be focused. You can't be making silly mistakes, because say you are funded and you accidentally press the wrong button, you might lose the fund in your account instantly, like this, just by one simple mistake. You need to be focused when you want to be serious about this game. Risking too much on a single trade, that's just greed, anything but greed. If you don't have a standardized risk management approach, I will not teach you. End of. I will not help you how to be successful in this game. You can't be greedy. You can be greedy if you have tested it and you know price is life is in these areas. You can't be greedy risking 10%, 20%, 30% on one trade. That's just stupidity. You can't be doing those things. You need a standardized risk management approach. Why don't you take profits orders before you think it will go further? Once again, that's greed. That's different, because you are running on hope as well. But if you have no stats why that trade will go there, like, why do you think price action? If you just have a trade because you want your minimum 3-to-1 risk reward and you're not going to exit up 2R, you're not trading the market, you're trading a P&L. Look at what the market is giving you. If there's signs of reversal, you get out that trade. It's as simple as. entering trades prematurely without confirmation of your rules. Sorry. So if you don't have confirmation, you're not using the checklist, you're not utilizing a trading plan. So you are your biggest enemy once again. You're going on gut feeling. Sometimes you will have gut feelings, but you need to be backed up by a trading plan because you have to be accountable for yourself. Remember, if you take trades on your gut feeling, and then you actually find out that these trades are all losers. So you might have a profitable strategy, yet the trades you took on gut feeling, you might not account for in your strategy, and your strategy might actually lose your money. So you had a profitable strategy, yeah, because you made stupid mistakes in the market where you went on fear and your gut feeling, you've actually turned that strategy into a negative strategy, and you might blame us for it, for example, yet you're not accountable for yourself. So you need that physical checklist to actually emphasize and practice discipline. Discipline is what's going to keep you going. Like, you don't realize how sometimes it is monotone, but you need to do these things to actually be profitable in the long run. Entering trade without meeting the rules, that's kind of similar in this physical checklist. Risking too much because you want to make up for your losses. So once again, that's something people will do. Oh, I've lost 1% of me, I'm going to lose 2%, so then I can make it all back. The market doesn't work like that. Once again, it's going to be detrimental to your actual strike rate and your profitability in the long run. Because at the beginning, yes, we will be adamant, use the same standard risk approach to your trading. Over time, and it won't be a matter of months, it will most likely be a matter of years, you realize that you can adjust your risk on certain positions because the market does present itself better. But by that time, you should have clear strike rates. You should know you like if you are profitable or not, and you should be approaching the markets a certain way that you know and be sensible in managing your risk. So you're not hopeful that they're like you will get your money back, because you want to eliminate that hope. If you're going to trade and you're hopeful, the trade is not going to go your way. It might go your way, but that's going to be your luck. Over, like, in general, the trades that won't go your way. And I was like just using like words like should, could. The market should do this. The market could do this. Oh, if the market did that, this would have happened. Once again, that's hope. You haven't back tested your strategy. You haven't full tested your strategy enough to be saying these. Like, that's why you're saying these things. You are hopeful the market is going to do this. The market will do what it wants to do. It's, as I said, it's a living beast. So just to sum it all off, I might have been a bit aggressive, but I am very passionate about these things, because if you do implement them, you see massive changes in your trading. First of all, you don't earn money if you don't learn. So stop moaning and just start working. Simple as. Don't like come and tell me, oh, I've hit 3 stops in a row. Have you watched the news? No. There you go. There's your problem. Like, sometimes it'll be simple things like this. Just be aware, be vigilant, be smart about these things, guys. Also, you might suffer from recency buyers, and that's something which you might actually cover when you start a live trading. You might hit, oh, I've hit 4 winners in a row. Like, you'll be over the moon, and then you go in the market and you think every trade you're going to take is going to be a winner. Like, it will have to come down to like humbling yourself. That's something you'll have in your trading plan as well. Sometimes, like for me personally, if I start the day off and I have a winner, most chances are I will have more winners like in that day or the following day, because I'm in the zone. I know what I'm doing. If I have a loser and I have 2-3 losers in a row, it might be hard for me to actually break out of that zone, but I'm putting things in place to actually stop that and recognize when I am actually just not in the zone and not trading properly. But that's something you will be able to utilize from a trading journal as well, like using Stintally. And last thing I just wanted to leave you guys with is actually a quote by someone else. I can't remember who it was. And it goes, people are fearful when they should be hopeful, and people are hopeful when they should be fearful. So just think about that one for me, and I'll catch you guys later.